Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? Because at the moment we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down then on the lower ones. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly, what we can see now here in the monthly time frame, we can see how the market has just created this overextended M pattern. And in general, after the creation of an overextended M pattern, what you want to see is the market create a move back up to the neckline for the completion of the pattern at the previous support turned resistance. So here in the monthly, what we expect is for the market to basically provide a long-term rejection and a complete reversal from the bearish trend that we're currently having, at least for the completion at this previous support turned resistance. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see how we just got an impulse to the downside, followed by the start of a correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the market still hasn't retraced to this 0.32 of the Fibonacci taken on the weekly impulse, which is the first level to which you expect the market to provide a correction to before then starting a potential continuation to the downside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. Dropping down on the daily time frame, what do we have? Now here on the daily, we can see that in creating the correction that we have just identified on the weekly, here on the daily, the market has also started creating this W formation. And in general, after the creation of a W, you want to see the market create a move to the downside to go and complete the pattern at the previous resistance turn support. So what we expect here is potentially a little bit more continuation to the upside before then seeing a rejection to the downside and completion at this previous resistance turned support. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, so the biggest speculators, what we can see here is that with the last reports, net positions first started increasing, and then with the last report, we can see how they have once again started decreasing. So in the long term, we're getting an increase, but in the short term, we're getting a decrease of the net positioning, going from a positive 3.7k, so with more longs than shorts, from an institutional perspective, to now having a negative net positioning of minus 3.8k with more shorts than longs, 202k shorts and only 198k longs. So EURUSD at the moment is getting bearish in the short term, but bullish in the long term. And that aligns perfectly with what we have already seen from a technical perspective. On the monthly, everything seems quite bullish. Weekly, we can expect a deeper correction. And on the daily, we first expect a completion and then the continuation to the upside. So what it seems here is that we have first a potential short-term shorting opportunity back to the neckline of this daily W formation, and then a longer-term longing opportunity for the completion of the M pattern that we have identified on the monthly. So how we will be approaching this first short-term shorting opportunity here with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market, as we will have, to an intraday bearish market. And only if the market will shift from an intraday bullish to bearish market, only at that point we will be adding EURUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to potentially complete this W formation at the neckline. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.